Does the thought of having to choose which company's stock you want to put your hard earned money in stress you out? Are you like, I don't have time to do all of the research and I can't stand the anxiety that watching each stock go up and down causes? Well, then it sounds like mutual funds might be the right investment for you. See, with a mutual fund, you get to work with tons of different investors who have the same thoughts and feelings. And they're like, look, I just want to take this stress off of me and I want to leave it up to a professional. So, a mutual fund is where lots of investors pull their money together and the professional will select tens or hundreds of different stocks and even bonds to put those investments in. So when you purchase a share of a mutual fund, what you're actually getting is a little piece of lots of different companies and even bonds. That means a mutual fund automatically has diversification built into it, which is fantastic. And those professionals want to make sure that you are going to succeed and that the rate will increase, that you will have a high return. Why do you think that is? It's because the professional is going to get a commission a lot of times based on how well those investments do. So, the one downside of mutual funds is that you are going to have to pay a commission to a professional. So, are these fees worth it? Well, the fees are going to vary in how large they are, but even a 1% fee a year could cost you tens of thousands of dollars over, decades of having an investment put into that mutual fund. However, if the funds are returning a very high percentage, then it might totally be worth it. It's something you're going to have to determine as you analyze different types of investments. Going with the cheapest fee, the lowest fee that there is, isn't necessarily the correct decision. You want to look for the mutual fund that is going to have the highest return. So, what can you actually expect from mutual funds? Well, you are investing in the stock market in most cases, so it's going to fluctuate. But typically, you can realistically expect 7 to 12% return each year. I mean, that's way better than you would ever expect to get from a savings account. So, this is a way to be able to be completely hands off, let someone else take care of it, and still get a high return. In fact, I have to tell you, my mutual funds in the last couple of years have returned closer to 20% a year. Now, with that said, there are going to be years that it's much lower than that as well. So, any type of investment, we want to make sure that we're doing this for a long term. We're not putting our money into an investment that has any risk if we're going to need it just a few months or a year down the road for something like a down payment for a house or a car. We can't risk losing that money. This is putting your money into something for the longer term. On the flip side, we have another type of investment that's super similar called an index fund. I really like index funds because they don't have nearly as much when it comes to fees because they're not professionally managed, but they really are the same idea as a mutual fund. The biggest difference is they are a pre-selected group of stocks based on a certain criteria. So one of the most popular index funds is the S&P 500. And what that consists of is the top 500 companies in America. So those companies are going to change and they do have different percentages that they're based off of. But overall, the S&P 500 has increased on average close to 10% a year for the last 50 years. Now that means there were some years that were down and other years that were much higher than 10%. But again, if you are going to put your money in for the long term, for several years, for a decade, for 30 years, then you have time for the market to have some downturns, but those upturns are going to be much higher. And when you get a share of something like the S&P 500, you are really diversifying your money without having to make the decisions yourself. So, mutual funds and index funds, I would highly recommend you consider putting your money into those after you do your research to decide whether or not it is the right investment for you. Don't forget to like and subscribe so that you can be set up for a successful financial future.